Okay, so I'll be explaining about inventory cycle. In the process involved, the goods are delivered, and raw materials and components for the manufacturer, finished goods for the resales, and goods also are reviewed and sorted and stored. Goods may be assigned for stock keeping and unit codes. Tagged with barcodes, it is for the easier tracking. Inventory levels are also monitored. Physical inventory counts informed predictably, help minimize the chance of stock out, and stock orders are placed. A consumer may place a purchase order for the company's product sales. Next, the stock orders are approved, verified against original purchase order, sales slip, and internal purchase. Goods are taken from stock, pulled from stock areas, and sent either to the productions or directly to the customer. And for inventory levels are also updated, records are edited and shared with all the relevant stockholders. For the low stock level trigger purchasing, used to restock goods and material as needed, for example, just-in-time system usage. And these are the source documents involved in the inventory cycle. There are production schedule, receiving report, material requisition, inventory master file, production data, cost accumulation and variance report, inventory status, and shipping order. Next, journal entries and account involved. For the receiving raw material, we debit inventory, credit account payable, or cash. For moving raw material to the line production, we debit work in process inventory and credit inventory. For the adjusting raw material inventory, we debit cost of goods sold and raw material reserve. In finishing goods inventory received, we debit finished goods inventory and credit work in process inventory. Finished goods shipped out, we debit account receivable and credit sales and sales tax and payable. For the we debit cost of goods sales and credit finished goods inventory. In finished goods inventory adjustment, we debit cost of goods sold and credit finished goods reserve. Physical count inventory adjustment, we debit raw material inventory, work in process inventory, finished goods inventory, and credit cost of goods sold. For the specific inventory adjustment entry, we debit loss on inventory valuations, credit raw material inventory, work in process inventory, and finished goods inventory. So these are all the account involved. And then for the flowchart for inventory management process, so for the first one, start. The stock will in from the purchasing material in the purchasing department, and then the settlement payable. Stock will out when stock request, stock in, and then go to production. Quality will out and go to shipping. End of the flowchart for inventory management process.
So next, I will continue with internal control. There are 5 components in internal control, which is the first one is control environment. This contains moral values, managerial skill, and the honesty of employees. And the second component is the entity's risk assessment process, which is evaluate risk on a regular basis as change in an organization. For the third is control activities, which is policies and procedures that help ensure that management directives are carried out. And then next is information system and communication, which is relevant information for taking decision are to be collected and reported in proper time. And the last one is management of control. So 2 points should be mentioned. First, if the entity use IT for monitoring the flow of goods and accumulating costs, it needs to evaluate both general IT controls and the inventory application controls.
I will talk about the risk area. Audit risk is the risk that an auditor issues an incorrect opinion on the financial statements. Examples of inappropriate audit opinion include the following: issuing an unqualified audit report where a qualification is reasonably justified. Second one is issuing a qualified audit opinion where no qualification is necessary. And next one is failing to emphasize a significant matter in the audit report. And the last one is providing an opinion on financial statements where no such opinion may be reasonably given. Okay, control risk. The major steps in setting control risk. For the first one is understand and document internal control. Second one, plan and perform tests of control. And the last one is set and document control risk. Okay, for the understand and document internal control, we need to understand the 5 components of internal control, which is controlling the environment, risk assessment, control activities, information and communication, and lastly monitoring. Okay, plan and perform test of control. The auditor must identify the relevant control activities within the entity's inventory system that ensure that material misstatements are either prevented or detected and corrected. Okay, audit procedure used to test the entity's control activities in the inventory management process are discussed in subsequent section. And the last one is set and document control risk. The auditor sets the achieved level of the control risk after the control are tested. The auditor should document the achieved level of control risk using either quantitative, amount or qualitative terms. Okay, for the inherent risk, industry related factor, a number of industry factors may indicate the presence of material misstatement in the inventory. There may be problems with the proper valuation of inventory in terms of measurement of inventory at the lower cost or net realizable value. The last one is technology changes in certain industry may also promote material misstatement due to obsolescence. Okay, for the engagement and operating characteristic, the type of product sold by the entity can increase the potential for defalcation. Inventory is often difficult to audit and its valuation may result in disagreement with the entity. The auditor must be alert to possible related party transactions for acquiring raw materials and selling the finished product. Okay, that's all.
So the next slide, which is a session, will be presented by me, which is Shami Shaukina. So the first session is occurrence. The possible misstatement is fictitious inventory, and the control activity, which is also known as internal control, is segregation of duties. And the test of control is by observing and evaluating proper segregation of duties. And the substantive test of details is by vouching a sample of inventory additions to receiving reports and purchase requisition. Moving on to the second session, which is completeness. The inventory received for the possible misstatement is inventory received but not recorded. So the internal control is by receiving reports matched to vendor invoice and entered in the purchases journal. And the test of control is by tracing a sample of receiving reports to their respective vendor and invoices and voucher. And the substantive test of details is trace a sample of receiving reports to the inventory records, such as master file. So moving on to the next slide. The third session is authorization. The possible misstatement is unauthorized production activity resulting in excess level of inventory. Example of control activity is preparation and review of authorized purchase or production schedules. And the example test of control is review authorized production schedules. And the substantive test of details is test a sample of inventory shipment to ensure there is an approved shipping tickets and customer sales. The fourth assertion is accuracy. And the possible misstatement that could happen is inventory quantities recorded incorrectly. So the control activity is periodic or annual comparison of goods on hand with amounts shown in perpetual inventory records. And the test of control is by reviewing and testing procedures for taking physical inventory. And the substantive test of details is by recomputing the mathematical accuracy of a sample of inventory transactions, such as price times quantity. So the last slide for assertion is the fifth assertion, which is cut off. The possible misstatement is inventory transaction recorded in the wrong period, and the example control activity is all receiving reports processed daily by the IT department to record the receipt of inventory. And the test of control is by reviewing and testing procedure for processing inventory included on receiving reports into the perpetual records. And the substantive test of details is by tracing a sample of time cuts before and after period end to the appropriate weekly inventory report and trace the weekly inventory report to the general ledger to verify inventory transactions are recorded in the proper period. And the last assertion, which is classification, the possible misstatement is inventory transaction not properly classified among raw materials, work in process, and finished goods. And the example contractivity is materials requisition and production data forms used to process goods through manufacturing. The task of control is by reviewing the procedure and form used to classify inventory. And the substantive test of detail is by examining a sample of inventory check for proper classification into expense account. So that's all from me. Next, I'll pass the presentation to my friend.
So next I will proceed with inventory case question. Okay, for the answer of question 1. For the first audit procedure is inspection of tangible asset. Okay, the planning for this case is to attend the physical inventory count for rocks forever because the inventory largest account on the statement. Basically, this evidence can provide assurance the assets are exist. Okay, the second audit procedure is observation. It consists of looking at the process or procedure being performed by others. For example, the counting will be carried out by shop staff in teams of two. It provides audit evidence about the performance of a process and useful in helping me to understand the entity processes. Okay, for the third audit procedure is inquiry. Inquiry consists of seeking information of knowledge person such as UJ, a firm of specialist diamond valuers or verify the jewelers. It's also important which is used extensively throughout the audit and often is complementary to performing other audit procedures. For the last audit procedure is scanning. Okay, the scanning is the review of accounting data to identify significant or unusual items such as high value of inventory in this case. This citation related to this audit procedure which is searching for large item in accounting records. Okay, for the answer of question 2, uh, the first point is qualification of expert. Okay, the UG must possess the professional certification, membership of a recognized body. Okay, for the second point is experience of the expert. Okay, UG should also have expert in that field, such as the valuers of the javelers. Okay, the third point is objectivity. UG must independent in accomplishing his duties and not discouraged by any means. Okay, the last one is evaluating work, confirming the source data used and confirming the assumptions and method used. Okay, for the answer of question 3, the first procedure is inspection of records and documents. It consists of examining internal or external record or document. Basically, most audit engagement, inspection of records and documents make up bulk of the evidence gathered. Two important issues in this inspection is reliability of such evidence and its relationship to a specific assertion. Okay, for the second audit procedure is external confirmation. It represents the audit obtained from written response, a third party or of auditor. Confirmation also used to obtain audit evidence about absence of certain conditions. For example, an audit sent confirmation to me to verify that the inventory is assurance. Okay, for the third audit procedure is performance. And this involves the independent execution by auditors of procedure of control that were originally performed by company personnel. For example, I can reform inventory allocation for rock forever. Okay, for the last audit procedure is analytical procedures. It consists of evaluation of financial information through analysis of plausible relationship among financial and non-financial data. For example, I can compare current year inventory value with prior year balance after adjusting for any increase or decrease in sales.